and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta.
And I'm Agam Vakil. Here are the headlines. Indian markets open lower and concerns of global growth slowdown. Metal stocks lead the declines. Tata Motors Futures is in focus after Jaguar wins landmark case against Chinese copy of Evoque model. And the 3-month US Treasury yield drops below the 10-year rate, triggering concerns of a recession. SEBI seeks more power to investigate accounts of listed entities.
Okay, let's see what the markets are doing at this point of time. Doesn't look good. We're down almost 100 points on the Nifty, so there is negative traction that's been seen on the Nifty currently. It's almost down 95 points. Pull up the Bank Nifty, that was down almost close to 250 to 300 points the last time I checked. So there is negative traction that's happening on the Nifty Bank, also down almost 1% in trade. So there is negative traction. Let's take a look at where positions are being taken at this point of time. Among the call writers and put writers. So from 10,500 to high level, call writers have become aggressive since for the past two trading sessions the markets have looked little wobbly, and put writers are writing in from levels of 11,000 to 11,400, 500. So it looks like it will be range bound at this point of time, but there is resistance that's coming in at higher levels. Where are positions being taken today? It's the call writers that are active in trade today at the 10,400 and 10,500 mark. Call writers are writing in today. But Agam, stock specific wise, what are you seeing?
Sure, let's take a look at that list of all the stocks which is seeing an increase and decrease in open interest. That is expiry, so we will have more unwinding as against increases. Torrent Power, PC Jeweler and Chennai Petro among those stocks which are standing out in an increase in open interest. We do have Cholamandalam and Kaveri Seed Company also, well, moving here and there. But we do have a substantial amount of decline in open interest. We move into expiry week with a 39% decline in OI for MRF, even as its underlying remains largely unchanged. Yes Bank is the other interesting one. It's down 1.3% and 27% decline there as well. UPL, Bharat Electronics and Bharat Forge among others which are looking at unwinding. But nothing really stands out except for the fact that the benchmarks in general are seeing a decline in today's day of trade.
Okay, that's the view that we are seeing at this point of time. But let's take a look at which are the stocks that we will address on the show today. We'll talk about SRF, which has managed to move to record highs in trade. Both REC and PFC have been doing well in trade. Container Corp has seen a massive open interest build up. What's happening there? And RBL Bank among the best performing private sector banks as of late. So that's something that we will talk about. But before we get our guests on the show, here's a reminder. If you have any queries regarding the futures and option market, you can call us on 0224540441 or write to us on Twitter, Facebook with the AskBQ hashtag.
Okay, well, on that note, let's get into the experts for the day. We have Navneet Daga of Yes Securities and Amar Singh of Angel Broking, who are joining us on the show right now. Good morning to both of you, and thank you so much for joining us. Navneet, let me start off with you. How are you seeing trade on the indices now, and what are you doing?
Well, hi Agam, good morning. Look, if I look at our market positioning, it was the last time that we spoke, it's looking likely the kind of a bit of an overstretch in terms of the momentum trade that we are seeing in our markets. Somewhat a correction was warranted in the market, and we have it's a welcome step to my understanding that we have seen some kind of a global weakness, and we have seen a good correction happening on and some of the heavyweight stocks as well. So to my understanding, it's a kind of a healthy sign. If to my understanding, the way the walls are not picking up and the kind of no major unwinding also is seen in the at the money put options on Nifty as well as on Bank Nifty. There's a chances that we might go into that consolidation mode from here on, and we digest the kind of gains that we have made in the last couple of weeks. So the trade would be basically to identify the strength in the market and to be on the long side, because overall setup suggests that still we are not run out of the steam, and the kind of positioning that we are seeing from the FII side, there's a greater chances that the lot of the dips on the market would be likely to be bought into. So I'll be positioning myself for buying into the stock specific side, as well as if you're getting the chances on somewhere on the index as well, look for good strategies on the protect yourself on the upside, protect yourself on the downside, and play on the upside on buy on the dips is a good strategy in this kind of a market setup.
Navneet, I believe you have a call on the Nifty Bank. Can you explain that call?
Look, we have almost seen 700 to 800 points of Nifty Bank correction in the last 2 days. To my understanding, now the risk rewards are quite favorable to be on the long side. The overall setup for the private banks has not moved and not basically not violated the kind of strength that we have seen in the last couple of days. So to my understanding, a covered call strategy is a good strategy to be in the current setup, whereby being long on the in Bank Nifty futures in the levels of 29,300 to 29,270 odd range, and simultaneously selling an upper strike OTM call of 29,500 in the range of somewhere near 110 to 115 at the current market price. It's a good strategy. On the lower side, we're getting a break even of somewhere near to 29,150 odd. That's where one should keep a strict stop loss at, and play for an upside target of 29,600 for this expiry itself.
Okay, well, so a cover call is a strategy employed when an investor holds a near-term neutral view with a positive bias on a security. This involves selling a call option of the asset in which the investor has bought securities. And of course, as Navneet has already mentioned, the way he is employing this covered call. But Amar, let me get you into the conversation. How are you seeing trade on the indices, and what are you doing with options and futures in this case?
I would say that looking at Nifty, we are seeing the market gap down. Currently, it's down by almost 100 points. But where Nifty is currently at is a very strong technical support zone on the daily charts. And the daily charts, they continue to be extremely strong with the bullish momentum intact. Yes, due to global conditions, we witness some selling pressure, which is being witnessed right now also. But I could say that there could be a temporary bounce back from these levels, and these levels, that is a low of the day which has been made, that should act as an important support level. So one can look at Nifty options. I would say Nifty call options, 11,400 call options currently trading around 54, 55 levels. So one can look at initiating a buy in that with a stop loss below 42 and a target of 65 on the upside. And also what we are seeing is, as far as the OI data is concerned, the call option, if you look at 11,500, that's moved to 11,600. So the range on the higher side is being set, and on the downside, yes, 11,000 on the put option. So that's the maximum OI. So this is the range that we see. But overall trend remains positive. Yes, any dip should be used as a buying opportunity. But at the same time, I would say we'll also have to be slightly cautious, because if the global markets do witness further sell-off, then we would not be, we would also be impacted by that.
Okay, that's the view that's coming in. Let's get in stock-specific views. Amar, you go first. Which are the stocks that you want to talk about today?
The first one I would like to talk about is Balrampur Chini. This is one stock, if you look at today also, what's happened in this particular stock is that it was consolidating, and from almost 144 levels in the first week of March, it corrected all the way to 127. Today, in spite of the market being down, the stock is up around 135 levels. Technically, I would say it's very strong on the long term as well as the intermediate term trend. Short term, we are witnessing some choppy trading sessions, but with a positive bias. So this is one stock one can look at buying. So ideally, a good level to buy is around 130, 131, with a stop loss of 126.5 and a target of 140 on the upside. And the second stock to look at is a sell on Bharti Airtel. Bharti Airtel, what we are seeing is that the stock did witness a significant rally over the last few trading sessions, almost 2 days from 11th March, and on 12th March it rallied all the way from 300 levels to 354. But after that it is consolidating, and also technically on the long-term charts, the stock is meeting with resistance at higher levels. So this is one stock one can look at going short. So somewhere around 330, 332 levels, current levels around, one can short with the stop loss of 340.5 and a target on the lower side at 311.
Okay, and Navneet, you have one long and one short call for today.
Look, the idea being is basically keep on finding other stocks whereby we have seen some kind of a relative strength and the kind of a chart breakout. We have seen I've been long on SBI since almost 260 to 70 odd levels. It's looking to me the way the stock is behaving, it's a good entry point. Once we have seen almost 305 odd levels, it has seen a multiple supports, multiple supply zone. But however, any dips on the lower side towards the 292 to 293 levels, the current market price, and look to be on the buy side with a small stop loss of somewhere into 288 on the futures, and play for again a upside target of 306. Second stock would be being short on the metals. Metals, however, what we have seen is a global weakness. It's been visible on in Indian markets as well in terms of metal stocks reactions. But however, in the near term, we have seen the top formation has already happened for most of the metal counters, whether it's JSW Steel or Tata Steel. I'm looking at shorting Tata Steel with a target of 490 on the lower side, and on the higher side keeping a strict stop loss of 520 on the March futures.
Okay, that's the view that's coming in. Let's get in some of the stocks that we want to discuss. The first stock that we want to discuss is SRF, and it's had a monster rally, almost approaching 2500 now. Today, open interest is down 2%. The counter is up almost 0.5% in trade, but the counter is trading at record highs. The rally that started sub 2000 has moved up. It's up almost 10% this month. So what's caused the rally, and is this rally something that might see a resistance, or it's in no man's land? Let's ask our guest. Amar, I'll come to you. SRF, what's the sense? Is there any kind of resistance that you're seeing, or even at this level you would recommend accumulating this counter?
I would say that looking at SRF, the trend across various time frames continues to be extremely strong and bullish. And however, what we are seeing on the daily charts, that there is now some bearish divergence on the daily charts. So what it effectively means is that it is going to meet with some resistance on the upside. But the overall trend still remains positive. And also if you look at the highs which were made in June 2018, 2446, that has been taken out, and it's trading comfortably above that level. So what I would suggest is that it needs to now close above 2440 levels, 2430, 2450. That's a very crucial zone of resistance. Currently it's trading above that, but closing above that is going to be very important. But I would not recommend buying at these levels. So one can rather look at booking profits if it closes below 2440.
Okay, well, look to book profits. That's the word coming in on SRF. But moving on to RBL Bank, this is another one which has been in traction over the last 3-4 weeks, though, however. What we've seen is it move within a range of 625 and 650. That's the case through most of March. But it has also risen from 550 from the lows of February. So it certainly has seen a little bit of an up move coming off late. In today's day of trade, RBL Bank, well, as usual, is seeing some bit of increase in OI, and of course its underlying is down by as much as less than 1%. But Navneet, how are you seeing trade on RBL Bank now?
Well, the stock is kind of defined a lot of gravity in terms of the price movement. We have seen the stock has been quite resilient, forming that even in the weak market conditions, we have seen the stock performing and near to that 52-week high mark. So to my understanding, the overall setup again, it would be a kind of a positional trade rather than a very short-term trade. But somebody having more than a month time frame, if you're getting at an entry price in the range of 615 to 620, to my understanding is a good entry range. Overall, the setup suggests that still the room is possible on the upside. There's being a bit overbought in the daily charts, but it's looking like that the kind of a correction that we're seeing from all 650 odd, a good entry point would be somewhere in the range of 615 to 620. If you're getting that with a small stop loss of 600 on the lower side, one should look to be on the buy side, and looking likely that again the retest of the 650 to 660 mark would be possible in the coming days.
Okay, the two stocks which have been doing well of today is REC and PFC. Obviously, the deal went through in which PFC will buy out 14,500 crore shares worth of REC. What's the view ahead on both the counters? Navneet, either PFC or REC, will this traction continue?
Well, the kind of a setup it is, it's looking likely, but I would rather refrain to chase the momentum on the news flow because normally a lot of the good news might be digested in the stock price movement itself. So, to my understanding, I'll wait for a day or two for giving me a confirmation that the trend is still intact on the upside and it's moving further highs. So, somewhere in the levels of 150 odd, it started to trade above one REC. I'll look for a kind of a momentum trade. But rather than chasing at this price, I'll refrain myself for waiting for a downside to enter into the stock. It would be much more fruitful.
Okay. Amar, actually, let me take the same question with you as well. What is your view on REC or perhaps PFC, and how would you trade with these counters?
I would say looking at REC technically on the charts, it continues to be extremely strong on the intermediate and the short-term trend. However, what we are seeing is that REC on the upside, the high that was made on 19th March, 150.40, it's currently around 148.50. So that should act as an immediate level of resistance. But it seems that the way the stock is trading from today, that high is likely to be taken out. And overall, looking at the monthly charts also, they also clearly show that once the stock sustains above 144, 145 levels, then the stock has the potential to rally towards 158, 160 levels. So yes, one should be on the buy side in REC.
Okay, that's the view that's coming in. The last stock that at least we want to take on from our list is Container Corp. High open interest build up today. It's seen an open interest build up of almost 20% on a consolidated basis. What's the way ahead? Amar, you go first. Container Corp, what's the sense that you're getting in?
Yeah, looking at Container Corp, what we see is that the stock has, I would say, initially bounced back from almost 460 levels to make a high of 532. Currently, it's around 500 odd levels. Technically looking, I would say that it is going to meet with stiff resistance around 510, 520 level. And if I look on the weekly charts as well as monthly charts, they really don't inspire too much of upside. So the stock is likely in for some consolidation. On the downside, I would say the stock has got very good support coming around 480. So 480 and 520 is a range that I see for Container Corp, at least trading in the short term. Only if 520 is taken out on the upside, then we could expect a rally towards 550, 560 levels.
Okay. Well, moving on to a bunch of other stocks that have been moving. Okay, let's address Ashok Leyland. What's happened is that it did go and see a lot of strength of late, moving to the levels of around 95 to a certain extent at one point in time. It's come off from those levels. It did also move and test levels of below 80. But at this point in time, it seems like it is taking a little bit of support around its 50 daily moving average. It's up as much as 6.5%, but there also, I reckon, must be a lot of confusion as to what to do with this one as we move in to the next few weeks. Navneet, can you come in on Ashok Leyland? Is there a trade here at all, or would you want to wait for something to emerge before you take a call on the right towards the long or the short side?
Look, it's a kind of almost in the middle of the trading band of 80 to 95. Okay, so to my understanding, it's no major conclusive trade out there. But however, I'm not very convinced about the overall structures of the way the auto stocks have been forming. Whether it's been Ashok Leyland, Maruti, whether it's been M&M. So it's to my understanding, a lot of supply zone is still visible on the higher side, and traders are still looking for any shorting opportunities. The stocks are going higher. So to my understanding, at this point of time and nearer the levels of 88 to 89, it's kind of a wait and watch approach. But however, look for any upside towards the 91 odd mark to remain on the sell side rather than being chasing on the dips, because the overall structure to me is not very convincing. It's looked like still the lows have been possible on the lower side itself.
Okay, that's the view that's coming in. The next stock we want to discuss is Wockhardt. Has managed to do well. It's up almost 2% in trade. Navneet, what's the sense on Wockhardt? What should one do at 437?
Look, at least it's giving a sense that somewhat the near-term bottom is in place. The way the stock has been finding a lot of support in that range of 400 to 410 odd mark, to my understanding, I'm not very convinced about the way we can see major momentum on the upside. But however, looks likely that there's some kind of a resemblance in terms of the price getting a stability in that price zone of 400 to 410 mark. To my understanding, the risk rewards are being on the favor to be on the buy side. But however, these counters have been very volatile because of the news flow as well. So to my understanding, the one keep a strict stop loss of 410 and can still play for an upside of 460 odd levels on walkout. But look for any dips towards that 425 to 430 range to be as an entry point.
Okay, well, 2 straight days of losses for the markets in general. So it's been an hour in, and I'm going to ask our experts to see if they have found anything interesting before we conclude the show. So Amar, let me come back to you. Anything interesting popping up on your screens that you would like to talk to us about?
I would say that one can look at Asian Paints, because if you look at Asian Paints, technically it continues to be extremely strong on various time frames, and even on the daily charts, in spite of the market correcting, it is still holding firm. And technically it's very strong on the short-term charts as well. However, it has got some strong resistance coming around 1475 levels, 1475, 1480 levels. Currently it's around 1463. So a breakout above that level, 1480 levels, could mean that the stock is headed for a significant rally towards 1520 odd levels. So once it reaches 1420 on the upside, one can look at buying with a stop loss below 1456 and a target of 1520 on the upside.
Navneet, anything that you are sensing apart from the stocks that we've discussed? Anything that's popping up on your screen right now?
Well, I was looking into this entire OMC pack, and somewhat actually stands out to me. Indian Oil Corporation, it stands out to me because the kind of resilience the stock has shown about at 150 odd mark. It has seen in the morning it was up almost 3.5 to 4%. It has seen some kind of a correction intraday movement. But however, it's looked to me it's a good entry point in the range of 153 odd, with a small stop loss on the lower side if one can place that in the levels of 150. Until unless it breaches below that level, the stock is showing a lot of traction on the upside. So one can look to buy this weakness and again play for that upside target of 160 on IOC.
All right, guys. On that note, we conclude this session, and I'm going to take a moment to thank both our experts, Amar as well as Navneet, for joining us and taking us through their views on the markets. For more updates on the F&O space, you can also check our website out, bloombergquint.com. And on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint Live.